This is a stock train reality. Blah, 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 blah. See, Daddy screwed up there. Okay. This is a stock train reality podcast, episode
59.
All right, good job.
I have losing days, and we all do. And it happens. I'm not saying I'm an angel. I'm not perfect to my days. Sometimes those voices they take over.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. One of his most embarrassing moments in life involves a tennis ball. ClayTrader.
This is one of those stories where in the moment it's absolutely terrible, but now looking back on it, it's absolutely hilarious. So I don't remember how old I was, but I was at the age where like, hey, Dad, you want to go and, do this? Hey, Dad, you want to go and do this? And it was no big deal, because, sometimes as kids, you get to that stage where you're like, yeah, I'd rather not be seen publicly with my parents or whatever. But this was a stage where I'm like, hey, Dad, you want to go play hockey? Because this is when Mighty Ducks was out. And a fun fact from a long time ago, that's like one of my favorite movies. And I saw it a bunch of times and I wanted to play goalie. So I had some rollerblades and we had a hockey net and I said, hey, Dad, you want to go play some hockey? We're on the goalie. And then he would just take shots at me with the tennis ball. So we were out there doing this, just done it a million times. And then there's some girls that are walking by on like the other side of the street on the sidewalk there. And he takes a slap shot on a tennis ball and boom, hits me right in the kid maker. And I'm just like, whoa. So, Dad, you all right, Clay? Oh, yeah, I'm fine. So I knock it back to him. And then he takes another, I think this one might have been a wrist shot or something, maybe not a slap shot. But anyways, and literally, boom, right in the kid maker again. And I was just, but these girls were walking across the street. So, I mean, I don't know what was going on, but I was just, okay, I'm fine. And then finally when the girls passed by to, get, out of range or whatever, I just collapsed on the ground and started crying. And it was, I mean, for you, any lady listeners out there, like I said, if you're ever attacked by a guy, go for the kid maker because he will be out. It doesn't matter. Just if you don't have any mace, just start swinging punches, kicking for that area because boy, does that hurt. And I still remember the feeling, but it was very embarrassing at the time. Here I am laying in my driveway crying and my dad was laughing at me. I won't even try to stick up for the guy. He knew what was happening, so he thought it was quite comical. Luckily, I have 3 kids, though, now, so nothing was damaged. But, man, now looking back on that could have been real bad. So, but, yeah, tennis ball, hockey stick, and a net, that's where my mind always goes the first place as wow. That was really embarrassing. So, Ches, I don't know. We could take this in some very bad directions. So, I'll just...
You want to
do you have any embarrassing moments with the tennis ball? I'll just leave it at that. And I'm assuming you'll say no, but we'll see.
So not specifically with the tennis ball. However, you're actually pretty lucky that you guys weren't using, kind of a rink, the hard plastic ball.
That would have been bad. Yeah.
Childless if that if your dad was 2 for 2 on some slap shots at you. But no, from an embarrassment standpoint, though, I have had a couple collisions with my kid maker myself when I was a bike messenger. If I would get cut off by a car or something and come off of the seat and get the top bar there. So as far as embarrassment, I've done that in a pack of cars, about 40 cars, and they've all watched me do that. And you can't really keel over in the middle of traffic, so you kind of gotta put on your strong face and get off to the side on the sidewalk, and then from there you can cower in pain. But from a tennis ball standpoint, no, but I have had some kid maker embarrassment in front of probably over 100 people. So yep, it's happened. It's just a part of life, I guess.
Yeah, that's it's just, I guess that's a good way to put it. It is part of life. So good times. Ches and I, we always learn something a little bit because none of this is I don't tell Ches what the fun fact is. I just start talking about it and then he's got to improvise on the spot. So this is where we always we bond a little bit right here. So anyways, let's get to our episode. Today we were talking with Shawn. He goes by the name dimliwitti, and I screwed that up, but it doesn't matter at this point. You'll understand why. I try to get it, and I'm never going to get it. But he explains it, and he pronounces it, and everybody laughs at me. But that's his name in the chat room if you're around and you've seen him there. But an awesome interview. We discovered a couple new little twists and things, different ways to approach the market. And I thought it was a very, very beneficial interview. And Ches and I commented, this is, we're well up into the 50s now in terms of the episodes, and we're still, pulling things out, little nuggets of wisdom, even for us. Not that we know it all or anything like that, but it's always cool to see how different people approach a trade, different people, what their mindsets are. And we got to get a lot of good viewpoints of that in today's episode. So without further ado, let's start talking with Shawn, or dimliwitti, or whatever his name is. Well, hey, Shawn, welcome to the show.
Thank you.
Now, we were just discussing this and everybody's laughing at me, but Shawn, his screen name, what he goes by in the chat room, I had to ask him right when we got the call started, just to try to make sure I pronounced it right. But I'm pretty sure I'm going to butcher this, but dimliwitti? Is that how it goes, Chet? Is that it?
Shawn, I'm going to let you take it from here because we just talked about this, Clay. You're in trouble. You're in trouble already.
Dimliwitti. That's what is right. Is that it, Shawn? Bail me out here, Shawn.
All right. If you think of it as the two words, it's a play on words. It started back in my gaming day.
Okay.
Dimly witty.
Dimliwitti. Man, it's so easy now. Why don't you tell me to break it down into 2 words to begin with? Dimliwitti. That does make it a lot easier. But
right.
Anyways, to you listening out there that are part of the chat room, the community, dimliwitti, that's the name he goes by. I'm definitely just going to call him by his first name, Shawn, because I'm not going to continue to butcher this throughout the duration of the podcast. But that is the screen name he goes by. So, and he's quite active in the chat room, so I'm sure you've seen him there before. But he said he'd be willing to do this, so here we are. So thank you once again, Shawn, for taking some time out of your day. So I guess Shawn, which says he kind of binge watched a bunch of the past podcasts, so he kind of knows definitely what's coming. So we'll start off with the typical question. Tell us about, kind of the start of everything, what got you interested in the markets, and we'll just kind of go from there.
Well, my initial introductions to stocks as a whole were, of course, when I was working for a large company. They offered 401k plan, and I wanted to look into more of the stocks and their portfolios behind them. So I had my first toe dipped in the water then. But as life took me along, I mean, that was basically it for me on investing until a number of years ago. Unfortunately, my wife's grandfather had passed on, and he bequeathed to us a sizable portfolio through Schwab, and that was baptism by fire in a number of different ways. But he had sort of helped us along prior to him passing on. He had managed portfolios professionally and personally in connection with his job at Franklin Marshall, and his advice and demonstrated successes really set us on our long-term investing strategy and plans. And then only about 2, maybe 3 years ago, we started trading. And I say quote trading because I never did any intraday trades. They were all swing trades.
I see. And when you say, baptism by fire, I'm sure, going from, your grandfather professionally managing accounts to now, you've got this big portfolio that he had all set up. It's probably really interesting to kind of have control of that all of a sudden. So now, I guess what particularly...
Actually, let me ask a question. Just I'm curious. Obviously, he was very successful, and you made the comment that he gave you some wisdom. Can you care to share what that wisdom was? I realize that you said it was from an investing perspective, but what was that kind of advice or wisdom that he gave you?
It's more schooling in the F word in our realm here in the trading market, the fundamentals, and some tools that he used. Some folks may have heard of some of them. Of course, Schwab has a number of their tools and their portfolio management education items, but also things like Value Line out there that give you weekly updates and portfolio recommendations, if not They'll highlight stocks and different things, what they're doing. They have a lot of analyst reports. They do some technical, but they do a lot of fundamental and corporate information, like their bottom lines and their capital and their business and management side of the businesses. So really, I got started in the underlying company aspects of it, where you fall in love with a company or you absolutely hate a company, and that'll dictate what you're going to do with them and how you see them in the 3 to 5 to 8 year down the road. And that's how I started managing portfolio. My wife is heavily into it as well, so it's not just me, and she's actually the sanity behind my chaos. So I sort of bounce a lot of different ideas, even in the day trading stuff. I'll bounce what the day's going to do today, at least what the charts are telling me. She's actually overheard a lot, not so much seen it, but overheard a lot of your webcasts, for CTU and different things. She'll walk in on me and I'm listening to it, a lot of good information, and she'll say, "Oh, nope, I wouldn't have entered that," or she calms me down a lot on giving me some good conservative point of view of investing, and it saved me a number of times.
Yeah, I think that's. I actually just finished reading a book by Marty Schwartz, who's a very, very famous trader. But he actually also kind of traded with his wife, and his wife was the one who could usually dictate if he wanted to take an impulsive trade or a trade that actually looked good. So I just think that's pretty cool that your wife's involved with that as well. But I know obviously your grandfather had passed on a lot of pretty much how to manage on a longer term time frame and investment. But what actually led you to kind of start drilling down as far as the time frame to do, like you said, the quote unquote trading, closer to, even if it's not intraday, just shorter term with, not a multi-year outlook? What led you to kind of do that? Was it just your general interest in the market, progressing further, or was there some other reasons?
Well, there's different ratings and whatnot, Value Line, as well as many others. They do timeliness in regards more of whether they're going to happen in a very short term or long term. They give different grades for that. And I'm seeing a lot of volatility in the markets at the time, 2 or 3 years ago, and seeing a lot of missed opportunities in quick grab for profits. And that is very attractive. It got me interested. And so I started looking at more of the technical side of it. I even started dipping my toe into it. Got stung, and so smacked my own hand and started paper trading for a good while.
Let's talk about this bee sting that you got. So just walk us through, how did you find this stock, and then just take us through what long or short. I mean, all the details. I mean, people like to hear, as sadistic as it is, but I throw myself into this category. I like to hear about people's losers because I think that's where you can learn the most from. So let's talk about this bee sting that you got. I'm not going to let you just gloss all over it like you tried to do. So let's go. Let's learn something here. So walk us through it.
Okay. Well, I've got Post-its here, and one of the Post-its that I marked has biggest winners and biggest losers, and that to me is a constant reminder of how bad it can go or how good it can go, and if you keep to your plan, how good it can work. But when you break away from a plan, and even back then I had a plan and just totally disregarded it. And that was a negative $24,248.27.
On one trade?
Yes.
Wow. I mean, what was the ticker symbol? I mean, what was your thinking going in? How did you find it? I mean, because at the time you obviously thought it was a good idea for you to put that amount of capital into it. So I'm curious, what were you doing at that point in time that led you to believe, because that's some confidence right there. If you're putting that sort of money into a trade, I mean, you are confident. So where did all this confidence come from?
Having a grasp, not a total grasp, or being a pro or anything like that at fundamentals. I took an aspect of looking at companies, and I went online and looked for highly volatile stocks. I started actually typing into spreadsheets highs and lows and closes of all these different stocks and playing the average game. Playing the averages and really cottoning onto sine waves, if you think of them on charts. The ups and the downs and reliability, so to speak, of stocks, what their highs typically are and what their lows are. And I was doing the averaging game and got stung on trying to think of the actual stock. You'd think it really stuck in my mind. I want to say
I would think so, but I mean, sounds like you moved on from it.
I did, which took a little bit, but I want to say ENDP, but it may have been LMT.
But it was a big board. It wasn't like some penny stock or anything like that. It was a real company.
Yes. Yeah.
Okay.
And then, that's another thing. Even on these intraday trades, I will check some fundamentals, some quick metrics, if you will, to see how if the company is echoing what the trend is doing. So if they're in a bull market and today they're up, but overall, on daily or weekly charts they're down, and their numbers don't echo that they're a bull stock, I won't enter it.
Yeah, that's pretty cool. You're using it as, a lot of people will look to indicators to say, okay, my idea is, valid or my idea is not valid. You're using fundamentals almost in the sense of green light, red light. If it's not agreeing in the long term with, what their earnings and all that other stuff are saying, then, you won't even, you'll steer clear of it because it's essentially not in agreement for that. So that's pretty cool.
Yeah, and that was a result of that big sting as well. Going against the trend. That to me, no, not going to do it. I know a lot of people will scalp or do a number of different things on pullback or whatever, but that's not part of my plan. It's good if it works for others, but nope, not for me.
Yeah, that's funny. I just did a video today I recorded, which by the time this airs, it should be public. But yeah, same thing about how one strategy may work for somebody. I mean, it may very well be a good strategy, not even like some sales gimmick type strategy, but a legitimate strategy. But it may be good for that person, but for somebody else, it may be a disaster of a strategy just because, I mean, we're all different, and I mean, we all have a different feel, and it's just not quite. There's no black and white way. There's no one size fits all. So that's funny you bring that up, and literally just earlier today got done recording that video. So good timing on that part. So, I mean, did you go long on this and average down, or I mean, did you buy a top? I mean, what exactly caused you to take such a big loss on this first kind of bee sting?
Well, I had thought I had bought the bottom,
but it wasn't the bottom.
Oh, by far no.
Now, did you buy more? Were you averaging down, or did you just keep kind of hold and cross your fingers and hope that it would eventually bounce back up?
Even to this day, I'm an all-in guy. I don't buy more or sell more. I don't sell out. In part, you'll see me oftentimes in your webcasts. I'm the all-in guy. I don't sell out for a piece of the pie. I'm in. But consequently now, I follow my stop losses a little tighter than a lot of people, and I get stopped out, yes. But it's once I'm in the profit land that I start following with a closer stop loss. And
okay. I thought you meant when you're just getting out that you're just selling for the sake of selling, but you're getting stopped out. So okay, that's right. No voices will be raised here. It sounds like. So I could feel my heart start to.
I could see it there. His face was turning red, but
you was starting to twitch a little bit. Like, come on, Shawn, okay.
You talked him off the ledge, so thank you.
Yeah.
No. I owe that to you too, Clay. Honestly, your YouTube videos were really, really helpful, and that's what pulled me in. Really, you do a great service to YouTube by showing. You give a little away. I will tell you that in your YouTube videos, in that you follow your stop loss down and capture as much profit profit, and that's a freebie you're giving out there, and that's something that I had caught on to, and what brought me in was a win from that strategy that kept locking in more profits, and I got really close to the bottom. I was on a short, and it paid for the training before I even got into CTU. So my wife was behind me saying, I think you owe it to Clay.
I like your wife. Sounds like you married yourself a fine gal. That's what I think. But, well, that's true. There's some stuff to be learned in the live trade videos, but I think you would agree here, Shawn. But it's almost, I'm giving away just enough to be very, very dangerous, where if you don't learn the other stuff that's going on, you're going to get yourself steamrolled. I mean, is that a pretty fair statement?
Yeah, you wet the palate, but you don't dish it all up, and which is great. It's a great appetizer, a teaser, and I would recommend to everyone, if you're not already, CTU is huge value in it, in just the education portion. But you'll see, if you follow the plan, and you use these tools, you'll more than pay for it.
So let's kind of go back to the journey a little bit. So you get stung, and you're like, okay, wow, that didn't feel very good. Where did you go? Where did you go from here? What was your next step? I mean, what path did you start to take at that point?
Well, that's what threw me into a big paper trading event, and trying to refine this averaging strategy and going online and looking for all these different plans. And that's when I locked into okay, Shawn, you know better than this. You're a big IT security guy. That's where I retired from. And from that, risk mitigation is a big word that's passed around, especially in government contracting. And I saw this thing, risk ratio, RVR. Wow, that's a familiar term that's used in an old profession of mine. Let's look into that. And I latched onto a 4-to-1 risk ratio idea, but I didn't have all the tools yet. So saying that and actually doing it were still separate. I had latched into doing more trailing losses, but that was a big assumption that I would be winning in the first place, and those stop losses weren't in place, which led to a few more losses, or permanent holds, if you will, which I just recently shed, thanks again to a recent big windfall.
There you go. Now you said this paper trading type adventure. So how long was this process? I'm assuming this was more than a 2-week stint before you started diving right back in the markets, right?
Right. Again, I weaned myself off of the paper trading. It was about 3 months. I kind of wanted to say at first 2 months, but I would say 3 months. And even then, some of it was paper, and then some as I became more familiar with specific stocks that I was tracking, then I dipped my toe in. But I was very, very tentative because that I had just taken that bee sting out and I was still itching it. So my confidence was not as it was, and so I was doing little things, and I'd hoot and holler over a $50 win, whereas before, I mentioned I had a $42,000 or a $24,000 loss, but I was doing 4, 5, 6K days every so often, and now I was smacked down from the perspective of losses, and had a reality check. So I started really being scared and doing very small trades just to test if I was really on the right track.
You said one thing that's beautifully said. You started to hear about risk versus reward and all this sort of stuff, risk ratios. But there's one I can't remember the exact quote, but there's one thing between hearing something and kind of understanding the concept and then actually doing it. And that's that's so true. It's very easy to understand and hear concepts in trading, but hearing and executing two totally separate things. So I love that quote from you. That'll definitely be in the show notes. That was a good one. So, but props to you. You did it the right way. You were scared, as you should be. If a $24,000 loss doesn't scare you or any listener, then I don't know. Can you please send me a few seeds to the money tree in your backyard? Because I would think that would scare anybody. But so you toned down your size and you just wanted to kind of, like you said, see if you were on the right path and see if you were getting it figured out or not. So, were you on the right path? How did that small size trading start to go? Were you seeing consistency, or is it still kind of up and down? Walk us through, I guess, the quote unquote small size trading.
Well, I'm a percentage or an averages guy. I liked to see 70% success on trades, which is not realistic. And when I would hit over 70% in a week, I'd celebrate, but I was constantly scratching my head as to why I wasn't just maintaining that. And we all know the market is not going to be kind to you, at least on a long term. Hell, it can't be kind to you in the short term. It can smack you upside the head, which it did. And wanting to see a 70% success rate, I had to sort of change my thought process. 70% success now to me is possible in that if you look at your overall gains versus your losses, but not your not the number of wins versus losses. Your stop losses now, for me at least now, keep me in the green versus where before, no way. 30% loss could easily just devastate you on a 70% win rate without stop losses. It's ridiculous.
Yeah, and it's pretty interesting how, I like what you said. The market isn't always willing to dish out those, 70% weeks, months, years, whatever it is. Sometimes it is, but a lot of the time it's not. And, with properly structured RVR trading, we have some traders, even in the inner circle and CTU specifically, who have a win rate closer to 40 and 30%. And the thing is, they're still profitable, which means they pretty much win one trade out of three. But like you said, if you structure your trades correctly, and, say you don't cut off, ones right away when they just go green, you let your winners really kind of run for you and, maybe trail your stop like we've seen Clay do in some of his live trade videos. Those can easily pay for the losers. And, that's pretty much RVR in its habitat right there. But I really thought it was interesting. Yeah, go ahead, Clay.
Yeah, I got to jump in here just because you're right. 70%, I could get 70% win rate easy if I just took all my profit at like $5. Like $5 win, $5 win, $5 win. I'd be like, oh yeah, wow, I got like an 80% win rate. The only problem is all it takes is one $60 loss, and all of a sudden that 20% where I'm losing has wiped away all my gains from the win. So that's an excellent point, Shawn. You can't look at your win rate as, well, how many winning trades? Because yeah, theoretically you could be in the green $1, sell out of the trade, and there we go. There's a winning trade, and you could do that 7 times out of 10, and you made $7. Sure, you have a 70% win rate, but you made $7. So all of a sudden, on one of those other trades, let's say 9, you're 90%. So yeah, it'd be easy to get $1 win 9 times. There we go. I win 90% of the time. I've made $9. Well, on that one other trade, if you lose just $10, which is still okay, $10 loss, but still you just wiped away that 10%, wiped away all those, $1 wins when you did that 9 times. So excellent point there, and I hope everybody realizes and understands, which is why I want to harp on it, because that's a great point by Shawn in terms of looking at 70% win rates in terms of physical trades. Very, very deceiving. You got to look at it. If you're at 50% win rate, that's fantastic, because if you're doing what Shawn's talking about and what Chez is talking, letting your winners win. And now there's a way you let winners win. It's, one of those things where you hear it like, oh yeah, that makes total sense. But back to Shawn's point, hearing it and actually doing it, there's a little bit more to it than that. So, but wow, Shawn, you wanted 70%. You hold yourself to pretty high standards, huh?
Yeah.
Not there's anything wrong with that. I'm just saying, wow. 70%. That's pretty. That's setting the bar high.
It is. I also don't enter a lot of trades as a consequence. I deny myself quite a bit. But the one thing I see common in your chat room as well as people are talking relative sizes and their action and things. A couple people are 2 shares, one contract, 2 contracts, or 100 shares and 300 shares. They're big in. It's all relative on the percentages too, and how much you're playing with. Because some of these trades where some folks are, I mean, I key in on volume. If the volume isn't there for the size of trades that I want to deal with, I'm moving on. I won't lower down to 30 shares or 10 shares or anything like that. I tend to gravitate towards 500 to 1,000 share trades, and those are that's how I practiced on paper, and that's how I execute in reality. And I even scale my RVR, or the number of shares reflects my RVR approach to it, so that I accept a lot less trade the higher the dollar value that I'm in. It's just I reduce my stop loss, and a lot of times I do get stopped out. But that represents a huge win when you're talking about 1,000 shares versus 100 shares. A $60, 1,000 shares, $60 stock. That's a lot of money on the line. So I'm going to cut that loose if it's going in the wrong direction quickly. Sometimes, I get stopped out and I don't get to play, and I say, "Oh darn!" But that huge percent in the long run, that's that recent VRX win that I emailed you about was huge.
Are you willing to talk about that some more publicly?
Oh yeah.
All right. Well, why don't you walk us through the VRX trade? Because I think does a great job of kind of symbolizing where you were in terms of you're just, I don't want to say guessing, because you were never quite guessing. You just had pieces of information that you kind of grabbed from everywhere, and you just didn't quite have them all glued together. So you were definitely not like some past guess, and probably like me, frankly, where I'm like, I'm an investor. I went to a message board and I found out this, this stainless steel muffler company. You were never nearly as bad, but I think it still does nonetheless. Anyways, walk us through the VRX trade. I think it does a good job of, like I said, kind of showing where you've been and where you're at right now.
Okay. Well, VRX is a company that I've followed and despised because a lot of their fundamental practices, their management choices. So I'd only short them. And then there was news. They were getting in trouble with NASDAQ because they're not doing their financial filings properly. They're not sharing or disclosing all the information, and they were having a deadline come up. So I shorted at 3:55 p.m. prior to the mornings when they were supposed to file, and that was 1,000 shares there. So the morning opened, and sure as
so let me just, so you knew going in that this was going to be an overnight hold. If you were shorting 5 minutes before, you were totally. So is this? I'm trying to think. I guess it's kind of like a swing trade, because obviously not quite a day trade, given that you're holding overnight, but.
Right.
How long were you willing to stay in this trade from? Was it a swing trade, or were you thinking that you were going to sell early, the next morning, or what was actually kind of the time horizon that you figured it might kind of play out as?
I intended to sell at least by the end of the day. Okay. The next day. I had put in a stop loss that honestly, I didn't think it would be hit, because I was following the 3 trends, and what my 3 trends are the daily, the 5 minute, and the 1 minute. All right.
And I gotta, because I find it fascinating. Your other trend is the fundamental trend. I almost picture your kind of, you look at the fundamentals in a brief sense to figure out, like you said, if the bearish or the fundamentals are bearish in your mind, then you better see a bearish trend on the chart. Is that accurate?
Yes.
Okay. So I almost picture that as like, let's coin a new term here, like a fundamental moving average, where you're like, all right, the fundamental moving average needs to be agreeing with whatever the trend is on the chart. So it sounds like to me, you're using 4 trends. You're using, like I said, you said the daily, right? The weekly.
Right.
And what was the other third one?
Minute.
The minute?
Yes.
The 1 minute chart.
Well, I know.
We got to talk about
sometimes I'll
this. This
do the
is
two.
I'm not saying you're wrong. I didn't know that the minute chart jumping to the daily and weekly. So yeah, where did this 1 minute thing come from? I'm fascinated. I'm not, again, all sorts of ways to trade. I'm not saying Shawn's wrong. To me, does that, Chez? I mean, that's kind of, we've definitely never had anybody that goes from the 1 minute to the daily, right?
Generally not, but we do have people who will utilize the daily to kind of pick the direction to shorter term. But I mean, Shawn was just taking it. The only thing faster than that he could do would be a tick chart. So yeah, if Shawn's pretty much pushed it all the way from doing 20 miles per hour on the highway to doing 150 down the highway on the 1 minute chart. So yeah, it's definitely interesting.
Yeah, tell us about the evolution or the history here of this 1 minute. Where did it come from to fit into your strategy?
It's a late arrival to, I've been doing 2-3 years over the long haul here. It was, let's see, day 2 of arriving to CTU. I know you gravitate more to 2 minute.
Yep.
I like the 1 minute. I also have ticks going down scrolling at the bottom of the screen, so I can see, when it starts really going past really fast. I know I got a lot of action happening, and then that'll draw my eye to it really fast. But the minute, especially, there's this little golden time at the end of the days. That last 5 minutes of the day, and everybody's trying to get their trades in. A lot of shorters are trying to buy out of their stuff, or people are trying to get their last minute of profits, and they're getting out of the market really fast in that last 5 minutes. That I really like the 1 minute chart for that last minute. And as I said, I got in this trade by shorting in the last minute. And I was watching a lot of silly people buying in. So I was shorting trying to get that last 5 minutes. I shorted it at the highest point I could, and recognizing there was a granny up ahead, that, of course, they didn't overcome that granny. And I bought it, what was it? Forget the actual dollar sign. I think it was $32.97 or something like that. That's where I shorted.
Nice. So just to kind of recap, you're using 3 trends: the minute, the daily, and the weekly. And then you're using the 4th trend, which is the fundamentals. And as you said earlier, you despise this company. So that tells me all I need to know is you're quite bearish on this company. So these 3 trends are based off technical analysis. And then the 4th trend is based off of a kind of just an overall summary and overall outlook on the fundamentals. Is that a fair statement?
That's fair. I would correct you on those trends. Depending on what time frame I'm dealing with, I said the daily, 5 minute and 1 minute, but the weekly.
Oh, okay, 5 minute. My bad. I thought you said weekly. All right. Shame on me for not paying attention to the guest.
No, I will do weekly, daily, and 5 minute on some serious swing trades. But in this context, I knew I was going to be going out at the end of the next day. And I was trying to get in at as high as possible so that I'm at a high short, because at that case you sell high and you buy low, right? So that's what I was aiming for.
Okay, so like I said, my apologies publicly for not paying attention. All right, so you got your trend. You got everything in your alignment. You go short, and then we're good. So the market opens up the next day. Let's continue the trade on from this point.
So it was... on the 5 minute chart, I start lowering. That's how I lower my stop loss on the 5 minute ticks. So the previous candle populates, and the next one's building. So that's when I lower my stop loss, and I'm already in the money at that point.
Did it gap down?
Oh yeah, it was a wonderful thing.
Okay, how much did it gap down?
Oh my gosh, I think I was hooping and hollering. It was $6,000 profit already. Just overnight, I woke up to a $6,000 profit.
This just happened, so I'm trying to think. I know exactly what day, but it was definitely a nasty gap down. So
yeah, March 12th.
So you're using the 5 minute to adjust your stop loss, and then keep this is getting good.
Right. So knowing I'm already in and I'm making money, And looking at some solid red candles and having a lot of fun with that, I actually sold or shorted 500 more when it broke through another granny. And I think that one went in at something 87. And it had cleared the big 00 number, granny, and had solid red candles indicating I was still going down strong. The RSI at the time was 23, 24, somewhere in there. Good losing momentum.
Now, question for you, because you kind of spoke earlier that you are an all in and all out type of trader. So what reason actually led you? I know it went through granny, so that's obviously some person's certain entry. But what actually did you have so much of a buffer of profit that you were willing to kind of add more to the trade? Because either way, where your stop loss is located, you're pretty much finishing this one green. So maybe just push it a little bit harder. Was that maybe why?
Well, yeah. Also consider I'm a bit of an oddball in the group. I have several portfolios, if you will, accounts, brokerage accounts, and different things. I use for long term, and I use for swing. And I just opened. I'm trading one from Ninja over to Interactive Brokers now for options, which I'll paper trade for a good while before I'm comfortable with options.
Smart.
That'll be. that I have a lot of learning to do there. So, yeah, we're still lacking confidence in that until I feel relatively better than I do now. I'll start dealing with that. But anyway, so having a day specific or intraday specific brokerage account versus my swing account, I figured this is a good opportunity to get into the day as well. And I hadn't transferred the funds out. Naughty. I know that was bad of me. But I hadn't activated the new brokerage account for day trading. So I used the wins that I had so far in that swing trade to do a purposeful day trade, which I emailed you later, actually this morning, Clay, that I had used the winnings from this day, from the 12th, to fund my new Interactive Broker account instead of Ninja. And that's what I'll use for options or day trading.
So you're really running things like a business. I mean, you're taking your winnings and then reinvesting them into continuing to expand the empire. That's kind of the way I'm looking at this. So, yeah.
Right, and also doing risk mitigation. If you have one account that's losing money and bleeding to death, you have two others with different strategies that earn money on their own merit and their own plans. So you can lose in one, and the other two hopefully are earning for you. Otherwise, you're doing things completely wrong.
So you almost have like a mutual fund of strategies, and you're diversifying using accounts to. You have a mutual fund of accounts, and each account is a different strategy. So, like you said, you're mitigating risk, you're spreading risk out all over the place. So, yeah, that's. I think we have a lot of firsts in this one. We haven't really had anybody use fundamentals like you do necessarily, and now, that's the mutual fund of strategies. I guess we'll just leave it at that. So, walk us through the remainder of this trade. I mean, when did you finally get stopped out, and what was the final profit that you walked away with?
Oh boy, it wasn't until like 11 something, 11:37, 11:43. I had two stop outs that happened, and I was leapfrogging my stop losses. And what I mean by that is, so every 5 minutes I was trading my stop losses, one stacked over the other. So I had a 1,000 share and a 500 share trade, and every 5 minutes, the next stop trade would leapfrog the other, and down and down. And so finally, I was stopped out by a pullback relative to the bear trend on my 1,000, because it was the furthest one down. Yep. And then it didn't touch the 500. And it went down further for my 500 and had a slight up. Since that was my only trade in, I was doing every candlestick after that, and it finally got stopped out. But those two trades, they were ridiculous. One was over $20,000 profit, and the other was 10, something like that.
So that bee sting has been cured. Is that what you're getting at? Cured with about $7,000 left in profit almost.
No, I still have a Band-Aid over that sting. I will never forget it, and that's why it's on a Post-it in front of me. Because it's a bigger reminder to stick to the plan, keep your stop losses in there than anything else. Because, the minute you get overconfident, somebody's always going to sucker
The market is there to definitely remind the overconfident, hey, I'm the boss here. So this leads to, I think, a question that we like to ask a lot. So the one trade, or the bee sting trade, as we'll call it, you thought you were buying the bottom, but it wasn't the bottom. But you clearly held to the point where that loss got very nasty. So in other words, you were not a very good loser at all. Now you've made comments such as, you know what, I'm setting my stop losses. If it's going against me, then I'm getting out. I mean, just a total, would you agree here, Ches? I mean, the attitude here in losses is almost about
it's night and day right there.
Yeah. So where, how did something happen, or what psychologically, what did you do to really get to this night and day in terms of losses? Because it sounds to me that you don't have any problem taking a loss at all. I mean, if it's going against you, hey, it is what it is, I'm out. Opposed to when you first got started, it sounds to me like you had a very difficult time taking a loss. So walk us through the kind of psychology or any tips and tricks that you've used, kind of mind tricks against yourself to try to get you to where you're at right now. Because it's fantastic listening to you talk about, how you manage risk and all that.
Yeah. I mean, I have losing days, and we all do. I walk away from the losing days with stick to the plan, or criticizing how I slid on my RVR, or I didn't strictly adhere to the plan, and it happens. I'm not saying I'm an angel. I'm not perfect to my days. Sometimes those voices, they take over, and they say, you can ease up on that profit loss, and then and then boom, it'll hit you, and your plus 1,200 day can become a negative 40 day, or whatever. But that's what's key, is that you keep your negatives down to a minimum. But what turned it around for me was watching RVR and a lot of webcasts, and that you're watching. Actually, your live trades have actually helped me a lot, in that there was one where you had a loss, and you criticized yourself, and much of the same way I criticized myself. You woulda, coulda, shoulda, is a saying that my parents used to say to me growing up, and it's basically, you're quick to change your ticker symbol and move on from a loss. Woulda, shoulda, coulda. Don't harp on the past. Move on. Keep going. And always my the mantra I keep repeating to myself is stick to the plan. Stick to the plan.
Yeah, and it's when you do stick to that plan, everybody always has hindsight, just like you said, woulda, coulda, shoulda. I can always look back at a chart and say, oh, I should have been short here, I should have been long here. But when you're trading at the hard right edge of a chart, which we all are if we're live trading, it's obviously much different, as the picture is going to unfold for you. But would you say that isn't it just nicer and easier when you do actually stick to the plan, because the plan, that you're not going to get stung again if you just stick to it, and that almost in itself is a relief that, a loss like that isn't even allowed to happen, because you have already kind of planned and structured your risk, and what the worst case scenario is, and if it is, it's just a little, prick compared to getting stung by a horde of wasps.
Yeah, absolutely. Great point. There is no $1,000 losses on a single trade. We're lucky. And I say we, my wife and I, we're lucky if we have a loss on a single trade that goes up much over $100 now. And when you're dealing with $1,000, $60 stocks, that's saying a lot on your stop losses and your RVR plan.
Yeah, you are being stingy with those stop losses, but I say that as not in a bad way at all. I mean, you're not kidding. If you're only taking, if $100 loss is rare and you're trading that size or position sizes, you're definitely, risk management is at the forefront of your plans. I'll just leave it at that, because you are definitely not letting anything even come close to spinning out of control. So good on you for that. Now that we're kind of talking about the same topic, what are some things that you think you're doing very well right now? So what are some of your strengths, you would say? And then what are some things that, you need to continue to work on, or you want to continue to work on?
Well, like I had said earlier, I'm really interested in options. I want to learn a lot more about that, and then I want to move on to futures and learn a lot about those. But I'm a methodical learner. My target is to learn options and then go to advanced options training, and then just try to get a good handle on that. And then I'll look towards the future. So I have a lot to learn in the options. But as far as what my current trading strategies are and what I see my weaknesses and my strengths, it's hard to label. I mean, I would fall back on that. I'm really stingy on the RVR realm, which has opened up a much bigger, broader difference between the wins and the losses. So I would say that's a strength. My weaknesses are those days where I insist on trading. Why do I kill myself every time? Why force the damn trade?
Because it's fun, man. Trading is fun. That's why. And you feel like if you're sitting there not doing anything, that you're a bad trader. That's why. I'll answer that question for you.
Right. And then you end up with like today I have one that's a forced trade, and it was $41.50 loss. And I have other losses wins for the day that are relative to that 216, 540. I mean, you have some good wins, but it's that one that always just, why? Why did you have to do that? You had to force that freaking trade.
Well, let's keep things in perspective here. It was a $41.50 loss, a reminder, compared to the ones of $500 and $200 that you just had today. So, I mean, if you would have sat here and said, I made $200 and I made $500, and then I had that one trade. Man, why did I make that trade that cost me $4,000? That's not what you said. You said $41.50. So I appreciate you being hard on yourself, but at least it sounds to me like you're still recognizing, oh, crap, I forced this. All right, I'm out. Peace out, $41.50. So good on you for at least realizing that you're being a bonehead in the first place, rather than it taking you to, be down $4,151 before you're like, Shawn, I think I might be a bonehead here. I forced this trade. So, I mean, like I said, totally appreciate you being tough on yourself. But Ches, I think he's being a little extra tough on himself compared to, because we know how bad it can get.
It can get real bad, and it essentially, that forced trade can lead you from, having a profitable day to a complete break-even day. But yeah, the $41, the fact it's just the way you manage your risk is so tight, and obviously, like Clay said, when you're trading that kind of size, you have to, risk management is on the forefront of what you need to really be focused on. So, obviously, I think he's just being extra hard on himself, and that's okay.
I do get what he's. Yeah, I do get what he's saying. It's just annoying. Like, why did I do that? Why?
It's more of an annoyance than anything. It wasn't like a hindrance. He's not gonna, go live in a shed now because of that loss. But yeah, it's just it irks him. It irks him, and it is.
That's a personal torture. It's like my own little bamboo shoot under a fingernail. I will sleep restlessly.
Dreaming about $41.50. Why did I do that? Why?
Exactly right. Because I know the trade. I'll live it for that day, But tomorrow I'll wake up and say, okay, it's a new day. I'm going to work on not doing those mistakes again, and I'll be good for a few days. And then, sure shit, I will force another trade. Damn it, if I can't get it through my thick skull.
I don't care if you force trades. I honestly don't. As long as you keep forcing trades that only result in $41.50 losses, but then get your head screwed on straight and then go make $200 and $500, I can live with that. And your uptrend chart will be just fine if your boneheaded things only cost you $50 every now and then.
Right.
Now, speaking from, I know you said you kind of reset and come back fresh the next day after if you do have a bonehead move or anything like that. What are some routines that you kind of do on a either daily or nightly level, either before the market or during the market, to kind of prepare for the day?
Well, you mentioned weaknesses and strengths. I will mention a weakness and a strength in myself. I am OCD, and it's actually CDO because that's alphabetized. When I start a day, I have to open certain things on my computer. I know when somebody's sat on my computer because things are moved or the chair's not in the position that I left it at. It's a little ridiculous, but I use that for me. All these ticks are marked off. I've got these things open. I've looked at FinViz. I've looked at stock charts. I've looked at, and I've done specific searches with the filters in place to look for what I'm after in a day. The evening prior, I go over exactly what I did wrong to just drive it home if I'm not already, shoving those bamboo shoots under my fingernails. I'll look at the trades that I did and do a summary of the wins as well to see if there's additional things on the table that I left there from today's trades or that are set up for tomorrow. Today, I asked if I could post my watch list, and ACAD was one of them. And I hope you did well with that, Clay. But
I actually traded ALDR. It was between those two. They were both the farmers that were moving pretty fast. But
that's right.
Yeah. So I went with ALDR. But yeah, ACAD, that was definitely well worth mentioning. But
right.
Yeah.
I got a good trade out of ACAD, and that was just a little homework that I had done. Actually, we're talking since we had Friday off, Thursday night. Just seeing what the candle looked like on the daily charts, looking at some fundamentals and different things that you expect out of what they should do, and made some good money off of them. But every morning I set up all those different searches, and then I start hitting. I use Schwab Street Smart as my swing trade and my long-term brokerage trade platforms, not the short-term stuff. Well, I do a lot of utilizing their research tools and different things, and what brokerage doesn't have some tools behind them that allows them to look up things. So I'll walk away from the whole setup once I've developed my initial watch list, and then start working on the RVR based on the number of shares and the value of the stocks. So they could vary from 3-to-1, 4-to-1, 5-to-1, even 6-to-1, depending on how many shares I plan on to trade and the value, and have an approach ahead of time. And then look at what they're currently trading, whether I want to enter, what the candlesticks are looking like pre-market, and whether the trends are indicating they're going to change, at which time I'll kind of just leave it there, and whether the fundamentals behind them echo the overall trends. Sorry.
So what I'm gathering here, Ches, I never heard Shawn say that he wakes up, he pulls out his phone, and he looks to check for any text alerts from some service, or he's not opening up his email to check out what the next hot penny stock pick is. It sounds to me like he actually has legitimate strategy and routine going on here. I mean, doesn't he sound like a real trader?
Only those texts that you send me, Clay.
That's true. Well, you're not supposed to tell anybody about those, Shawn. That's just between you and I.
That's the private label alerts feed that we sell for $5,000 a month. But we can't be talking about that. But I mean, Clay, I guess it depends on how you define a real trader. I wake up 10 minutes after the market opens and I pop on Twitter, and whoever tweets the first ticker on my feed, it's what I just go buy long and strong. So. I mean, I guess it's how you define what a real trader is.
That's
but yeah,
true.
It sounds like he's got some methodology, and he kind of sticks to it as far as routine, which obviously makes for a recipe for success, really.
I'm only pushing buttons.
Yeah, exactly. I mean, he's really a lazy guy. So this is in reference. We got to link that. Definitely put that in the show notes, Ches, where the ClayTrader mail segment about somebody accusing traders of being lazy and it's easy. So well played there, Shawn. Well played there. So I'm looking down at the time. I don't know where it's gone, but we got to start to wrap things up. So I'm sure you're well aware of this since you've been watched podcast episodes, but Ches has a time machine, and Ches, I'm sure, will allow you to go back and use the time machine. So if you could go back to, some point, when you first got started, what bit of advice would you give yourself?
Don't wait till you can afford it. See, for a long time, when I first saw those 401ks and I looked at stocks, I said, boy, this is a game for rich people. And really, first off, I'd smack myself upside the head, sort of Gibbs style, for NCIS fans out there. And I'd say, no, you don't need oodles and oodles of money to start investing or trading stocks. And then I'd also say, don't wait till you can afford it to learn. You can learn now when it's free to actually learn. And that way, when you have a little bit of money, you can actually start. Because I didn't start for far too long. I wish I was your guys' age, let alone a lot of these 17-year-olds we see in chat starting to trade. God, I'm envious.
Yep, it's but the important thing is that you've arrived at this point, and that you yourself mentioned earlier in the podcast is you love to kind of invest in your education, kind of always go further with that. And I think especially in kind of stock market and just investing in general, it's the education really doesn't stop, because the landscape is always evolving. No matter what it is, it's not one particular thing. It's just always kind of something that you need to kind of keep working on. And it sounds like you have no problem doing that. You already have your outline for you want to learn options and advanced options, and you already have pretty much, you've already designated your next 12 months of education. So you have a plan, and you just want to look at more products, which is really cool. But Clay already stole my thunder with my time machine, which I built myself, but that's okay. But one of the most important questions he's going to want me to ask you is, what is your favorite movie?
Well, that's what ranks. Okay.
This is true. This is the most important question. All that other stuff. Well, I already exposed myself from zoning out when I didn't remember what you said about your trend. So, I was just waiting for this question to come up. So this is by far the most important.
Well, okay. It depends on my mood. I waffle between these two. And I'll say I'll actually say it to myself, and you'll recognize what movie it may come from, is when I trade a stock and it happens to be around $5. I know I'm going to trade that stock for a long time, because $5 long time.
$5 long time. I don't know if I've seen that movie. What is it?
Isn't that Full Metal Jacket?
Yes, it certainly is, and even I knew that.
I've only seen that movie once, though. So it's been a while since I've seen
Clay, that. Back to zero. Streak is broken again.
Can I be honest?
That never
I was not a fan. I wasn't a huge fan of that. I liked the opening scene where the drill instructor is just roasting everybody. But I don't know. Maybe I need to give it another try. But
Private Pile. Oh yeah.
Yeah. I could repeat some other lines, but that's more of like we try to keep this kid friendly. So
yeah, we probably shouldn't
right.
do that.
Yeah.
Right.
So.
And then the other movie is Hitchhiker's Guide to Galaxy. That's another old. I read the book long before the movie came out, so it holds a place in my heart. But it's not everybody's.
They just do like a rebooted version of somewhat recently, like within the past 5 years, I thought. But
yes.
Who knows? Anyways, let's talk food. What is your favorite meal and dessert?
Hands down, lasagna. Call me Garfield. That's my favorite, hands down. And key lime pie.
Sounds very good. I could go for some pie right now, but it's a little bit too early for dessert for me. So what would you, what do you do for fun and hobbies outside of, trading the market?
Well, I used to be a setter for USAV team. That's men's volleyball. United States Association.
You're a gamer, but you're also used to be a setter for USA Volley. Define USA.
For Central Maryland, I was a USAV AA setter. I played doubles outside, sand and grass, and played for money and prizes for about 6 years.
So now you play video game volleyball? Is that what you mean by a gamer?
No, I was a gamer around the same time frame too.
Like a video gamer? Are we on the same page here?
Yeah, MMORPGs. And I was telling Ches that I actually hosted a multi-user domain that was on a 900 baud modem. This is before probably most of you guys even.
Clay's eyes just rolled to the back of his
I have
head.
no idea this just went from. Let me know when you guys stop speaking Chinese, and I'll join back in here. I'm just saying it's a little bit. My mind is not computing this because I think of gamer, and I think of somebody that sits down in their mom's basement like 20 hours a day playing video games, and then I hear you're a college athlete playing volleyball. So it just doesn't seem like that can exist in the same world. But I guess my assumption was
certainly
way wrong.
can, Clay, when you open your closed mind, but it's okay. They do exist. There's many athletes.
Where is Shawn getting enough time to practice volleyball if he's in his mom's basement eating Cheetos and playing video games all the time? That's what I can't comprehend in my. Where does all this time?
He doesn't sleep. Remember, gamers don't sleep. We just live in our mom's basement eating Cheetos and fueled by Mountain Dew. So there's no such thing as sleep for that.
That's a valid point. I stand corrected. So, anyways, we're going way off topic here. So, final question that we ask everybody: 3 words to describe a successful trader, or at least how you would describe a successful trader. So, what are those 3 words?
Well, good question. Good traders or bad traders? I'll tell you what. I'll put it out there in 3, both ways, because they both counter each other. Impatient versus patient. Random versus methodical.
Nice.
And closed-minded versus quizzical.
Nice. Well played.
Both sides of the spectrum. I think we've never had anybody do that either. That's pretty cool.
No, we've had all kinds of little news. That's why, and I don't even know what episode this is, Ches. We're over 50, but we're still learning new little things here and there, just as the host. So this is good stuff. So, well, hey, Shawn, or dimliwitti, whatever your name is in the chat room, I appreciate you taking time out of your day and hanging out with us. So thank you very much.
I enjoyed it. Thanks, guys.
Yeah, you did. I had a great time. So for you out there listening, hopefully you also had a great time. Would like to make a few final requests. If you're listening to this on the site, please click the share button, leave us comments. We do read them, and feedback is always appreciated. If you're listening on iTunes or any of the other podcast players, please subscribe, leave us a rating, and little things, little clicks of the mouse really do go a long way, and Ches and I really do appreciate it. So thank you again to Shawn, and thank you again to you as listeners, and we will see you back for the next episode.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the ClayTrader community, including the trading team, premium training, and more, visit ClayTrader.com.